Awesome. Hey, everybody. Todd Schroth here, EXP Realty Extraordinaire. I'm with the one and only Eric Tamayo. I wanted to thank everyone for checking in today, Friday at 3 o'clock on the 28th. We're at the end of the month. It's a crazy day of closings. Thank you for all of our lenders out there who are really crushing today and Monday as well, in case there's any rollover. Agents Who Win channel, we're trying to bring everybody here who can provide value back. I'm not really interviewing agents individually, but people who can bring value to the agents. Like Eric for himself, we had a VA specialist before. We've had anybody who's got something that they're bringing to the agent community, I want to bring to our channel here. So you're going to see it live here on the channel, plus on YouTube. It will be uploaded here shortly. It's also, I believe, on YouTube Live. I don't know how all this stuff works. Eric, thanks for dealing with these technical difficulties.
Yeah, of course.
Eric is a community neighbor to us, and we've connected, helped his mom sell her house, and we appreciate the referral there. And, we got connected just to really talk about paychecks, and then all of a sudden doing the payroll systems turned into a 401k question. What are you guys doing for retirement? And I'm doing the typical, what is it, $6,000 a person for the IRA. And then this was like mind-blowing strategy that you showed us, how we can put, and don't quote my numbers because I'm probably wrong, but up to $100,000 a year, married couple running a business away for retirement. So I want to kind of dive into that, some of the strategies that you have behind that, and how you can help the individual business owner, and kind of go from there. So I'll let you do your thing.
Awesome. Well, again, I appreciate you having me. It's a huge honor. And, over the years, I've gotten to know Todd and his family extremely well. And obviously I've helped my mom and some extended friends and family as well, with their real estate needs. So again, it's a huge honor to be on the show and, be able to reach your community. And, my biggest thing is, education and empowerment, right? When it comes to strategies like this, it's just a lot of people just don't know what's available to them. And regardless if you're a new realtor or, coming up in the game, or, you have a successful team. So regardless of what stage you're in your real estate career, I think at least knowing what, like I said, is available to you as a resource is really huge. So just to tell you a little bit about me, I'm born and raised in Orlando. I've been here my whole life, which I guess is a rare thing. Every time I tell people I'm from Orlando, they're like, wait, you're actually from here? So, born and raised in Longwood, Wekiva area my whole life. Went away to school in Nashville, Music City, came back, and now raising
Everybody starts in Wekiva and comes back to Wekiva, because there's so many people I've met that have that are back to the neighborhood, living either by their parents or near their parents, or in their parents' house, whatever.
Yeah, it's definitely a full circle moment. 2 little girls, 3 and 8. And my beautiful wife, Morgan, almost 10 years in October. So she's a nurse at Advent Health, and we're just living the dream. So, so for me, I joined Paychex almost 5 years ago. I'm a retirement plan consultant, as Todd mentioned. My goal in educating people is just really letting them know, different types of retirement plans, and really letting them understand the internal features of different types of plans, right? Because, I'm biased. Obviously, I love a 401k. I love the flexibility of what it allows people. But there's different types of plans, right? Especially as a realtor, and typically, owner-only operators, without a team, a lot of single agents, you can have a SEP IRA, you can have a simple IRA. So again, there's other retirement vehicles out there, but the beauty of a 401k is just you can do more if you need and want to, right? So the 401k kind of bridges the gap and pulls everything together from a feature standpoint. So the biggest thing I wanted to focus on today is just educating you on, what a 401k is, how it works, how it can impact you guys from a tax strategy standpoint. By no means, I'm not a CPA or a licensed tax expert, but this is what I do. This is a space I live in. And it's really impactful, especially for real estate professionals. So my mom's been in commercial real estate for over 40 years. I speak your language. I've grown up in the industry. And having a 401k is really a double-sided benefit, right? As Todd and I discussed, and when we decided to put his in place, it's double-sided in the sense that it's a great employee benefit, first and foremost. When most people think of a 401k, like me being at Paychex with 16,000 plus employees, right? They think of being an employee of a huge company and taking advantage of a benefit, right? But with the small business 401k, it's very different, because it's something that you as the owner of a company, right, whether it's just you or a team of agents, you can leverage your business to essentially fund your retirement, right? So beyond the recruiting and the retention aspect and the benefit aspect of a 401k, this is a massive legal tax shelter for you, right? Where, for example, if you're paying yourself 60 grand in W-2, right, and take the rest in distributions, and you decide to pump in $10,000 pre-tax into your 401k, the idea of running it through the business on a pre-tax basis is that you're going to directly lower your net income by 10 grand, right? So the IRS is now going to tax you on a $50,000 salary, not a $60,000 salary, right? So at a very high level, it's really designed to lower your net income, to minimize your tax liability, and at the day that just to give you an option of paying yourself first, paying your employees first, rather than stroke that check to Uncle Sam, right? So that's the tax strategy aspect of it. Is just making sure that, you know, if you need tax deductions, why go buy things you don't need, right? Why not put that money into a retirement vehicle that's going to earn compounding interest for you, you know, give you a long-term kind of legacy play for you and your family, and massively, you know, minimize that tax liability. So that's kind of the double-sided aspect of it. And then we can kind of go into how it works, how much you can put away, and things like that.
So, you know, when you first sat down with us before, you know, I've got 3 employees, 2 full-time, 1 part-time.
Sure.
And it was a great thing to, you know, that you said, and I'm obviously want to keep as much money as I can, but I want to give back as much as I can to my team, because they're what make us what we are, and
Exactly.
as owners and leaders. And if we don't have them and keep them loyal, then it's all of a sudden we're just constantly rebuilding. So how can I provide something back to them? I thought the 401k process, even the paychecks process, because I had my accountant doing it all the time for me. Call her up on Friday. Here's the hours. Here's the numbers. What do I need to write the checks for? I think my employees thought I was still in kindergarten the way they were getting their checks, because I do not handwrite things very well. Here's my little checkbook. I write it out. Here's your pay stub. I was all happy when we finally figured out direct deposits.
We got you.
And then, you know, you came along and we got this paycheck mode, inexpensive as well as far as running it. But, you know, so that leveled up my game of being an employer to employee relationship, where I felt more professional giving that at least. And then, you know, it was a nice bump for them to say, hey guys, we're giving you a raise, but it's not something you're going to see within your check. It's going to be something you're going to see within your retirement.
Exactly.
And so they were both excited to now start having a 401k. I think 401k, I think big business. And what are we, small business with 2 employees on full-time payroll? And they both love it. I mean, they take the full contributions. And when I sat down at the end of the day and ran the numbers, if the person's making 50 grand, and again, quote me the right numbers, it's over a 3% max.
3.5% max in your case.
Yeah. So they're both maxing that out. So really, I'm only paying another $1,500 or $2,000 that year, and, you know, seeing what they have, you know, that to them. And it's money that they weren't going to see, but they're going to see now in the long term. And so, and they stay with us for that. And I think it's great as we build our company. You know, you said you can put it on. They've got to be with you for a year to take advantage of it, or variation of other things. But it's something cool to offer as people grow with you.
Absolutely. And to speak to that basic plan design, and, you know, my basic recommendation for most people is exactly how we set up your plan, Todd. It's, you know, you can really customize the plan based on your specific needs. And in simple terms, you know, you can set your eligibility requirements, right? In your case, we did a 1-year waiting period, mostly designed for newer employees as you add them down the road, right? Because everyone on your team had been there for at least a year.
Yeah.
So they were eligible from day one. But a couple cool things, the way you can design a 401k compared to a SEP IRA or compared to a simple IRA, is that waiting period, the vesting period, because at the end of the day, it's cash out, right? It's a new benefit. You're adding it to your company. It's a business decision. So of course you want to take care of your key employees, but you also want to do it in a smart way, right? So the way we design Todd's plan, and usually a basic baseline for most plans, for startup plans, is, you know, say Todd hired me today, right? Brings me on as a W-2 full-time employee. I would have to wait a full year to even participate in the plan and put my own money in the plan, right? Year 1, Todd's like, Eric, congratulations. Really excited to be able to offer this benefit to you. You can now enroll in your 401k plan with us, and we'll start contributing to your plan as well in the form of a company match, okay? But the other built-in protection that Todd really loved, which you're not allowed to do in other types of plans, is put a vesting period on the plan. So in this case, year 1, they start contributing to the plan, but then they would have to wait another full year to be fully vested for that money, right? Because this is a benefit. This is an incentive for staying with the company, growing with the company, adding to their professional development and growing with Todd and his team. So, say they're with him a year, 350 days, right? And he terminates them, or they decide to go to a different firm. The matching portion of a 401k is 100% forfeiture back to the company, right? So that's not their money to keep and walk away with until they reach that 2-year anniversary. So again, it's kind of a built-in safeguard for business owners to say, hey, we're giving you this great benefit that's going to benefit you and your family long-term and build towards your retirement assets and goals. But again, we want to make sure that, you're committed to our team, you're committed to our growth, you're bought into the vision. And at that point, someone that's with you for, 2 years, they're most likely going to be a long-term employee anyway, so you don't mind paying them that money. So that's the really cool part about it, is just, again, the flexibility of him now having it connected to payroll, because, we all know that Todd is probably the busiest person I've ever met in my life, and probably took me over a year just to get that initial meeting.
That's true.
Be able to explain the benefit like this. So, at the end of the day, you're a business owner, right? You're building a team. You're focused on leadership. You're focused on growth, especially with EXP. I mean, the growth trajectory for you guys as an organization is massive. So it's very fast paced. And regardless of what industry you're in, real estate agent, construction, mortgage, I mean, it's a fast paced environment regardless. So you have to focus on your bottom line. You have to focus on the day to day, and you have to focus on revenue generating activities, and that's where Paychex comes in. So just to give you a brief history of what we do and what we don't do, I think that's really important. So again, I'm not a financial advisor, right? I'm not a CPA. The really cool thing about working with Paychex is that we act as two parties. So when you decide to put a 401k in place, if we decide together it's a good fit, at that point, you typically have to hire 2 companies to do it for you. Administration, right? One is a record keeper, and the second is a third-party administrator. Historically, they're a few $1,000s each every single year, but the key there is they don't communicate, right? They're 2 separate entities. The money's not moving in one direction. From a compliance and liability standpoint, all that work, right, of having a plan falls on the onus of the owner, the daily operator of the business, because someone like Todd doesn't have time to track eligibility, move the money, cut physical checks to his employees, distribute loans. That's where 401k gets messy. And I think that's probably the misconception about a 401k is if you add one, it's just too much work. So at Paychex, what we do and what makes us unique is we become the record keeper and the TPA. So we're actually a bundled solution. It's one party, whether you connect it to payroll or not. So it's another big thing. You don't have to use us for payroll in order to take advantage of our 401k. But as Todd's experience, once you have it connected, it's just easy, right? It's simple.
Yeah, that was an easy transition for us. So I want to stop you for a second on that part. It was, I mean, when you came in with that, I mean, that's where I was like, okay, wait, then I got to get to the accountant to do this. And so that was like I think we're paying like $70 a month or something for payroll.
Yeah,
we only got a couple of checks, but still. And if I have questions, they're answering them. I mean, I'm calling our rep over there with no problem. I feel bad because I'm like, I'm probably one of your smallest businesses and I'm having issues putting the numbers in. But no, I email over and he's right on top of stuff getting done for me, or even on a phone call if I'm having questions. And, I didn't want to get involved in any of that paperwork before. That's why I think it was intimidating. And you should have said, hey, Todd, this is not as hard as it looks. Let me get the appointment. Let's sit down and get this going.
Well, we know you're stubborn, so
Yeah, true.
But yeah, I mean and honestly, Todd, you are our ideal client. And what I mean by that is, most payroll companies, right, and most HR outsourcing companies focus on big business, right? Our main competitor, won't name names, but they focus on typically 100 employees and up, right? The way that Paychex was founded almost 50 years ago by our founder, Tom Golisano, is in his garage. He saw a huge gap in the market where small business, 1 to 10, 1 to 20, 1 to 50 employees needed HR outsourcing. They had HR questions. They wanted to outsource their payroll because they wanted to make sure that their taxes were paid on time, right? And that they were accurate. So that's the beauty of working with Paychex from a payroll standpoint, just to keep things simple, is you outsource that tax liability to us 100%, right? So if there are problems, if there are issues, we represent you on the behalf with the IRS. We're on the phones with the IRS on your behalf. So just taking that burden off you from a day-to-day administration standpoint is huge. And then having something like this fully connected to payroll with the 401k, it just makes things easier, right? So Paychex, we are the #1 record keeper, and we're the #1 administrator of 401ks in the country. Most people don't know that. We set up 2 out of every 3 startup plans in the United States. So, for 10 years in a row, that's a big deal. It's not that we do it that much better than everyone else. It's that we keep it simple, right? When you have payroll integration, it's one less step, it's one less headache, and just keep things, easy for business owners so you can focus on what you do best, which is, connect with your prospects, sell great real estate, manage the relationship post-sale, and focus on building a great team. So simplicity wins for sure.
No, trust me, when I just put the numbers in, hit go, I mean, we're done. And then I see the checks come and everyone's got their deposits. All the money's moved around the way it's supposed to. And it's stuff I didn't have to worry about. So that definitely makes a difference. I know we have slides on here as well. So if you want me to go into those at all, just let me know. We'll
go for it.
Here. Somebody posted this morning on a Facebook group, investing with your 401k into real estate. And so here's a question. Let's say I do take advantage of the full max contribution that I can make for my wife and I from the company into our personal or into our 401k of $100,000.
Sure.
That's money I could also take and put into 20% down on a nice investment property.
You got it.
So it's kind of do I want to buy an investment property and invest that way? Or do I want to do the 401k? And the misnomer has always been I got to buy stocks with my IRA, 401k, and stocks or mutual funds, whatever market traded stuff with those items. So we are now seeing people do like the SEP IRAs where they're doing the real estate through there. Now 401ks. Can I take that money and tell me if you're not legally allowed to answer this question?
No, I can answer that question. Absolutely.
The 401k money I put with you guys and use that towards investing in real estate. Take a double whammy, because I pulled it into the 401k, so I have the 100,000 there, but then reinvest it from there into real estate.
Yeah. So the beauty of the 401k is that unlike other types of plans, like I've alluded to, like a SEP IRA or a simple IRA, you cannot take a loan against those types of plans, right? So the 401k is the only type of qualified plan that you can borrow against your 401k, for capital for your business, for other investments. So the beauty of a 401k is that you can take a loan against it. The leverage and the advantage of doing so is that, effectively the interest that you're paying on that loan, you're paying to yourself, right? So you're acting as essentially your own bank, and basically prime plus one. So, you set your own terms to pay it back. It's typically 3 or 10 years to pay that money back. But again, any interest you pay on that loan to make those investments or any capital improvements, effectively you're paying yourself. So, a lot of people use it for like a down payment on a house, or if life happens and you need an emergency. So having that loan feature built into a 401k is really huge from a participation standpoint. So your employees know that, again, if life happens and you need to access that money before, 59 and a half, so you don't have to pay the penalties and all that good stuff, it is a nice to have feature. Now, you and I both know, right? A loan is a loan is a loan. If you don't need to borrow against your 401k, I would always recommend, seeking other options, but it is an option nonetheless. That's a great question.
Can you invest the money from there without doing the loan into like the equity portion of it? And I guess it'd be more of a financial planner style on that part.
Yeah, that's what we're kind of learning the line of what I can and can't say.
Yeah, and it's whether we know the answer or not. I'm like maybe giving the wrong one. Where the 401k owns the house. So if I found a property for $100,000, that's what I invested. I took that money from the 401, bought it, flipped it, put the 120 back into the 401k. Playing the investments that way. I'm just trying to think out of my head because I saw the post and I'm like, it's interesting because if I do stick the 100,000 into the 401k this year, that eliminates my capital I would have had from buying an investment property potentially. But if I and a lot of investment property.
Yep, and a lot of people go that route typically through like a self-directed IRA.
Yeah.
Or a self-directed brokerage account where, they have a little bit more flexibility when it comes to direct real estate investing. So that's typically the way I steer people is in that direction. I would say the 401k is more of a kind of a long-term set it and forget it type benefit in general. But you do have access with that loan feature to use that money if you need to. But definitely a great question for a financial advisor or a CPA, which, you and I both, partner with quite a bit locally. So.
Yeah, definitely. Awesome.
Yeah. Great question.
So you kind of went over the advantages. Well, I guess I don't know if you did or not. The advantages of the 401k versus the IRA and the SEP IRA. I know you talked on that a little bit.
Yeah. We could dive in there. So the biggest difference between, and I can speak to your experience specifically with your wife, is with the SEP, you can do up to the same 25% of your W-2 income, right?
Okay.
So it's the same annual limit in terms of like, 57,000 and 57,000 between both plans each. But the I wouldn't say disadvantage of a SEP, but the biggest difference between a SEP and a 401k is, again, you would have to pay yourself significantly more in W-2 to accomplish that 25%, right? So for example, if you're wanting to save $57,000 into a SEP IRA, you got to pay yourself over 200 grand in W-2 wages to do so, right? Whereas in a 401k, you can pay yourself 22 grand, right? And save 19,500 per year, right? Because you can do always 1 to 92% of your paycheck into a 401k up to that annual limit and have to pay yourself a lot less in W-2. So for example, you can get your 19.5 in. On top of that, you can match yourself, 3.5%, 4% of your wages. On top of that, you can do the discretionary profit share. So between all three buckets, you can still reach that 57,000. But guess what? You only have to pay yourself 148 to 150,000 in W-2, not 200 plus. So a lot of people like the 401k option because it's a true salary deferral, right? Compared to just having to really jack up your W-2 wages and take on all that additional payroll tax liability by doing so. Another big thing is, typically with the SEP, people dump the money in at the end of the year, right? It's a one-time deposit generally. Right. So, a lot of people don't like that because, the market's not doing so well on that one given day. You back yourself into a corner. So the advantage of having a 401k directly connected to a payroll service, or just having a 401k in general, is you're able to spread out those contributions on a payroll to payroll basis, right? So in your case, I believe you guys are biweekly, if I remember, or semi-monthly.
First and the 15th.
Yep. So, 24 times a year, you can make those deposits throughout the year. So you kind of diversify your risk a little bit, as being in the industry, kind of dollar cost of averaging, right? So it's just from a feature standpoint, you accomplish the same savings goal, right? You still have that same annual limit, but again, you can pay yourself a lot less in W-2. You have the Roth feature, which a lot of people like, especially at your firm, where they can have post-tax and pre-tax contributions. You don't have that in a SEP or a Simple. In a SEP or a Simple, there's no loan feature, which a lot of employees appreciate. So it's higher annual limits. You can save more if you want to. Again, 19.5 or 26,000 is a big chunk of money. Yeah. If you're in a position where you can save that much, God bless, more power to you. But the whole point is having the flexibility of getting money into the plan more often, not having to take on the additional W-2 salary to accomplish that same savings goal. And the biggest thing with the SEP, which a lot of people don't know and they're out of compliance with, is guess what? If you pay yourself that 25%, you have to give that same 25% to every single person on your team. So whatever percentage you give yourself, you're forced to give that same percentage across the board. And, they might be immediately eligible for it. There's immediate investment. So again, from a customization standpoint, money going out standpoint, it's a little bit more restrictive. Whereas in a 401k, you set those requirements. You pay yourself a lot less money, and all the work is done for you compared to, a SEP or a Simple is always going to be disconnected from payroll, right? You're never going to have that true integration.
So, with doing those different setups, I guess the question would become, do I need to be incorporated to run the 401ks? So I know as a real estate licensee, I can, we're going to get a 1099 from our brokerage that we're with. And so I'm Robert T. Schroth, PA, Professional Association. So the money, the check goes from the brokerage to there, and then I take the amount that I want out of my company. I realized that in 2004 after being a licensed realtor for 3 years, and I ended up paying a lot of taxes. Yeah. After that, I've saved myself a lot. So the $150 to set the corporation up was a big savings. Compared to what I was paying in taxes. Sure. Can you be a one-person company if I'm an S corp, or can you be an LLC, or do I have to be incorporated at all?
Great question.
401k setup?
Great question. So over 95%, I would say at least, and that's a conservative number, almost every single real estate agent I work with is a sole prop, right? They're a 1099 essentially employee of their own company, right? They're not incorporated per se. So the nice thing about a 401k is that you can simply use your social as your EIN number.
Okay.
And you can just make direct deposits into the 401k, in a lump sum amount, whatever frequency you choose, whether it's monthly or biweekly. Say, for example, you wanted to save 10 grand into a 401k over a 12-month period. We would just take that 10 grand divided by 12, whatever that number is. You would make a direct deposit into the 401k, but not as a percentage of a W-2 wage, if that makes sense. So historically, it's normally a percentage of your W-2 income. But if you are, LLC, filing as a sole prop, whatever it is, if you're a single operator, you don't necessarily have to be drawing a W-2 wage to take advantage of a 401k. You could just make direct deposits however often you want to save and whatever that lump sum amount is. That's a great question.
So you don't, that's the biggest thing is a lot of people don't understand the benefits of incorporating and what they can save there. And, the fact that it's like for us, it saved us a ton. I'm thinking I have to be incorporated to do it. So if you don't want to deal with the obviously second tax return, all the other good stuff, then it's nice that you can take advantage of it and not have to do that.
Yeah. And the nice thing too is that, most people I work with that are incorporated like yourself, they're an LLC, but they're filing as an S corporation, right? So for you, the advantage for you, Todd, and like most people I work with, they draw a W-2 salary, right? A fair and very reasonable W-2, and then they take the rest in distributions, right? Yeah. So, if you're set up as an S corp, you already believe in tax sheltering, because you save on the payroll taxes in that regard. So, that's a strategy for a lot of people. It's like, okay, well, let me pay myself, 40, 50, if I'm in a position to start finally drawing a W-2, let me pay myself 30, 40, 50 grand and then take the rest in distributions. Again, that's a CPA question, whatever that mix is, right? It might be 40, 60, 50, 50. But the whole point is, let me affect the W-2 side, right? So in your case, conservatively, or anyone's case, conservatively, you're probably going to pay at least 25% in federal income tax, right? And then you're going to pay FICA, then you're going to pay double FICA, because as an S corp owner, you're the employer and the employee of your own company, right? You get doubly taxed. It's kind of a blessing and a curse, right? So 15.3% plus say 25% all in, you're paying a little bit over 40% in taxes on the W-2 side of an S corp. So, that's a good chunk of money. Every dollar that's coming in through W-2 wages, you're making like 60 cents on the dollar. So why not leverage the power of a 401k to lower your net income on the W-2 side? And again, keep that money in your pocket, not Uncle Sam. And, the other big thing, and in my opinion, the most exciting part, and I think where your light bulb moment happened in your office over in Altamont, is guess what? As an S corp owner, because you're the employer and the employee of your own business, guess what? You get to match yourself.
Right.
Not only can you match yourself, but you can write that off as 100% business expense and loss of the company. So it's like, taking money from one pocket and putting in the other pocket and letting that money grow over time for you. So it's a big game changer. And one of the examples I use, I'm not sure if you have that slide up.
Yeah, let me go ahead and pull that up real quick while we're here.
It says tax savings example.
Yeah, nope, I don't want that. I want that. Can you see it now?
Can't see it through the screen, but I can see it on my computer. I know I'm calling it from my phone because we're having some trouble. But
yeah, let me just do this again. Sorry, folks, we were having trouble earlier and it was not working.
Yeah, I'm in full selfie mode here, so hopefully I've been not too shaky. Beauty of technology. It's a love-hate relationship.
Yeah. I don't know if it's on or not. I can't tell because it's not showing up well.
So I'll just walk you through the example. It's really simple. So when
I'll upload this to the group, everyone can see it.
When I talk about 401k as a tax shelter, what I mean is, again, leveraging the ability to take a certain percentage of your W-2 income, and put that directly into the 401k. So sorry for the squeaky toy with my dog in the background. But say, for example, you pay yourself 60 grand in W-2, right? This is the example that I had up on the screen. And you saved $19,500, which is the annual limit, into a 401k if you're under 50. directly into your 401k on a pre-tax basis, okay? Not only would that lower your net income from 60 to 40,500, right? That's a pretty sweet deal. But by running it through your business and leveraging your business to do that, and say you're in a 25% tax bracket, you're going to get that 25% tax savings today. So just by using, rather than put that money underneath your mattress kind of thing, all right, or put it in the bank where, I think Todd texted me 2 days ago and said, oh yeah, you're earning like 0.00005 on your money in the bank, right? It's kind of ludicrous. Now, again, you're leveraging your business to do it. So just by running that $19,500 in savings into your 401k through the business, you're going to save $4,875 by doing it on an annual basis. So not only are you pumping almost 20 grand into your retirement savings and that money growing for you over time, but by doing so through the business, you also get the double-sided tax savings of about 5 grand. Here's the cool thing. You're going to match yourself 3.5% of that 60 grand salary, right? $60,000 salary, which is another $2,100 saved into your 401k. But guess what? You save in taxes on that $2,100 as well, which is another like $525. So just between salary deferral and matching yourself and writing it off against the business, just as 2 buckets without even profit sharing, you're saving $5,400 in taxes by running it through the business.
Yeah. I mean, so that's huge money.
Yeah, it's huge money. And it's hard to find those types of tax deductions, and I always have this conversation with CPAs and my clients and saying, listen, like normally there's 2 things that are guaranteed in life, not to sound cheesy, right? But death and taxes, right? No matter what, if you're a successful realtor and you're profitable, with profitability comes a tax burden, right? So no matter what, you're guaranteeing yourself that you're going to be writing that check to Uncle Sam. So why not have the ability to, again, pay yourself first, give your employees a 1 to 3.5% raise that you can now write off as a tax deduction compared to just putting it straight into their paycheck. So it's a big deal. And when you really talk about a return on investment, it's one of the only benefits that you could put in place that could actually be costing you money not to do it, right? So I talk a lot about the cost of waiting. What does life look like without having something like this? Compared to, what's the cost of doing so? What do you handle, et cetera, et cetera. So,
right. It's for everyone that's listening. If you're listening to this in the recording or whatever, come back to our Facebook page. I'm going to upload the stuff. Are you okay with that, Eric, to the group?
Yeah, of course.
People can take a look at it. And you've got your little calculator on there as well. And it'll break down point by point the numbers you had gone through. Because I think I had to have you explain it to me a few times. And, you got out. I think you basically to the point where you pull out your daughter's crayons and drew it even more simple for me to understand.
Yeah.
And but it definitely makes a difference when you just every dollar that you can keep putting away, because we are really bad at saving for retirement. I don't have the forced plan. One of the things like with EXP, when we can buy our stock at a discount and it's taken out of our check, it's taken out. I mean, I've been talking about the stocks for a while. And it's money that's invested. I don't see it. It's gone before I can touch it. And I stopped the purchase plan for a little bit. And it's like, man, I wish I would have kept doing that because the way the stock was going. But I would also have more money put away. And it's like if I can have it taken out of a check and it's gone before I get there,
it's automatic. Yep.
And the times that I didn't take a regular check out of my company, and I would go at the end of the year, go to file my, or not at the end of the year, after the first quarter, second quarter, whatever, file my taxes, and I would not pay anything in, all of a sudden I had this huge bill. So, from the IRS. So now it's like I do pay my monthly contributions when I take my check once a month. And that is nice because at the end of the year, I have all that money that's basically sitting in the savings account at the IRS paid up. Like the 401k, we make our monthly contributions. So now we have a small nest egg slowly growing for that to happen. I always run at the April 14th down to our Edward Jones office with Mac and drop off our $6,000 for each of us to make sure the deposit gets put in time. So I'm, secluded for the previous year. We got ahead this year and we said, okay, here's 2019. Now that's filed, a month later. Here's 2020. Now we're done. Now we can feel like we're getting ahead. So the contribution's done there. What is I don't know if you can answer this. I know it's going to depend on the size of the company, but typical real estate agent with a small team or even by themselves, they've got maybe one assistant, maybe 2 assistants. If they're full time and those people are full time, you're going to provide this service to them. What is the average cost for the agent who wants to do something like this?
Yeah, so I'll just speak to your costs as a company with under 5 W-2 employees. We have what's called small plan micropricing at Paychex. So the cool thing, again, if you had a TPA and a record keeper separately, it would be quite expensive, anywhere from probably $3,000 to $5,000 a year, because you have those two different parties at Paychex. Whether you use us for payroll or not, again, getting back to that, you can be a non-payroll client. I do a lot of non-payroll business, but again, we're talking about simplicity, integration, ease of use, right? So for the 401k on a monthly basis, we charge a flat monthly billable. It's $85 a month, regardless of how often you run payroll. And the only thing that fluctuates is how many people actually participate, which is $5 per employee.
Okay.
Yep. And then there's a one-time setup fee, which we can chat about. There's some flexibility, there's tax credits, there's a lot of things that go into it. Like you said, it's going to vary quite a bit based on the size of the company and the amount of work in terms of building the shell, drafting the legal plan documents with the DOL and the IRS. But yes, on a monthly basis, if you're under 5 employees, it's $85 plus 5. If you're above 5 employees, you're looking at about $150 a month.
Okay.
Plus the same participation fee. And then if it's a true owner only situation, as little as $27 a month.
Okay. So, that's very inexpensive. It was just myself.
Yep. So for about $300 to $350 a year to have a fully integrated 401k plan with payroll, that's probably all in, you're looking at about $100 a month to have a $53,000 tax shelter and start moving towards retirement. So
and again, the other $100 a month is tax write-off as well. So
yeah, so exactly, all the startup costs, the monthly fees, the participation fees are all tax deductible. Plus, another big thing I wanted to highlight for you guys are really actually 2 things. One, as of January 1st, and I don't even think I shared this with you, Todd, yet. Before, when you started your plan, the IRS was really starting to incentivize business owners to start a 401k plan. So much so that they gave you a $1,500 tax credit just for starting the plan. They basically write you a check for $500 every year for 3 years. They more than doubled those tax credits. So as of January 1st of 2020, they passed a new law called the Secure Act. So I just did a work with a company with 4 employees. Their tax credit was like $3,750, not $1,500.
Okay.
So again, and those are hard dollar tax credits, right? Not deductions that you're actually going to get back that are going to effectively, really impact your bottom line. So the Secure Act is a big game changer, especially for bigger real estate firms that I work with teams of 30, 40, 50 employees. I mean, you're looking at tax credits between, 6 and 10 grand. That's coming back to the business. So that's huge. Yeah. So that's a conversation we can have. I can crunch your exact numbers and help you guys and determine what those tax credits would be. The second most impactful thing is the safe harbor deadline. To establish a safe harbor 401k, that has to be set up by October 1st. And the process of setting up a plan usually takes about 20 business days or so. So we're right kind of at that breaking point where, anyone on this live stream, again, my goal is to always find people that are open to a conversation, kind of continue the education and make sure that if this is a good fit for you, that we make sure we get something in place before that deadline, because that's not a Paychex thing, right? That's the big bad IRS.
Right.
And a safe harbor deadline is exactly what Todd has. So just a quick 2 seconds on this. There's a traditional 401k, and then there's a safe harbor 401k. The difference is, in a traditional 401k, say you have 5 employees, right? The average deferral amongst those 5 employees is 2%. In a traditional 401k, general rule of thumb, the owner, right, Todd, would not be able to put in more than 2% above that average, right? So you would be restricted based on the participation of your employees. You would fail compliance testing, it'd be top heavy, all that good stuff, right? Not to get into the weeds. So small business owners were like, wait, well, I want to do whatever I want with my 401k. I want to put in my 63,000 regardless of what my employees do. So that's where they created a safe harbor 401k, which allows you to do whatever you want. There is no compliance testing. The only caveat to safe harbor is legally you have to do a company match. So if I come across business owners like, oh, well, I'd love to give access to something like this to my employees, but right now we can't afford a company contribution, a traditional plan would be the only route. The only restriction being is you would only be able to put in a little bit less as the owner. So that deadline is October 1st. So again, if you're needing are wanting to put away a lot of money and you anticipate your employees either opting out or not saving as much as you, safe harbor is the only option. So I love to, schedule calls or schedule additional education for you guys and have that conversation. I can certainly help you kind of navigate what's kind of the best fit.
So time is of the essence with doing this stuff. As we wrap up, what is the best way for people to reach out to you, and like what are the next steps once you get them started?
Sure. So the easiest way to connect with me is my cell phone. I'll share all my contact information with Todd that he can blast out to the group.
Awesome.
Call me, text me, find me on Facebook. Please friend me on Facebook. I share a lot of content on there, LinkedIn as well. But yeah, I look forward to connecting with you guys. Again, 10, 15-minute conversation. I always told Todd, I was like, just give me 10 minutes. Just give me 10 minutes. Let me explain how this works.
How a cup of coffee can save you $100,000.
Yeah, it's crazy, right? It's just, knowledge is power. And I just want to make sure that people know what's available to them. But again, I mean, I'm not here to shove a 401k down, someone's throat and say this is the only option. The way we're trained at Paychex is to really understand the different types of plans, make a recommendation based on the needs of the owner and based on the demographic of their employees and what they think that they would do with the plan. So that's why I love what I do so much. I'm extremely passionate about what I do. I'm very blessed to, quote unquote, sell a product that, helps people retire one day and helps them pay less money in taxes to Uncle Sam if they need to. So it's one of those things that I know everyone needs. It's just a matter of timing and making sure that we can fit it into your business plan. So I'm here for you as a resource. Please reach out. Todd and I are very close. You can, shoot you a text with my cell phone number. Give me a call anytime.
And I will say, Eric is really good at what he does. Obviously, he finally got the appointment with me, finally convinced me to do it, and close that deal. But the guy's always on a vacation through his company for hitting his numbers or going beyond his numbers all the time. I'm sure your vacations this year have been a trip to your backyard.
A little bit. I'll take it.
Like the rest of us. But I can imagine what the company trips are coming up, because as the world opens back up and we start doing that stuff again, everyone that's been owed these treats. But no, Eric is really good at what he does, and I'm glad we connected on that level, because I'm glad we're doing what we are doing now as well. And so if you're looking for somebody who's a top in the industry doing this stuff, I mean, definitely reach out to Eric, guys, and let him get him the 15 minutes, whether it's a Zoom or coffee or lunch or whatever. We do have this blasted across the people from across the country in here, so hopefully we can get you some out of state people as well that can get you some bigger connections. So as we wrap up, guys, appreciate you checking out our site, watching the show. We'll be back here again next Friday at 3. We did take last week off because we wanted to celebrate our team's success that we've been having through the year, and went off on the Mount Dora Chain of Lakes with them. So it was nice to get out for a day and just take a break and kind of celebrate them. So
you almost got caught in a big storm, I saw.
What's that? Oh yeah, that was fun.
Got caught in a pretty bad storm.
Yeah, we're racing in. Our pontoon was doing 18 miles an hour coming back into the rain. It was like, oh man.
Too funny. Well, thanks again for having me, Todd. I appreciate it. And however I can be a resource to you and your community, I look forward to the continued partnership. So thank you again. I appreciate it.
Definitely. Thanks for jumping on here, guys. Everyone have an awesome weekend.
All right.